Hey, good morning. Happy holidays. Just wanted to let you all know that we're going over two pretty important things today in Capital OS Premium in our cohorts with our emerging fund managers. The two big things that we concentrate on in terms of preventing fund death, one of them is closing that working capital gap, making sure that the fund does not run out of operational runway. One of the ways that we do this is we make sure that we're really aware of what's called the fee wall. And that means not running out of management fees to fund operations. And in private equity and in venture capital, typically that's 2%. But the thing that you have to remember, let's say you're managing $100 million or $200 million, is most general partners of funds have what's called a 1% GP commit. So if your management fee is, say, 2% of a given investment vehicle, you may have to give 1% of that as your GP commit. And then additionally, the cost to run a typical fund, from what I've seen, generally speaking, an emerging manager is paying about 6.5 to 8.5% for fund one, maybe a little less for fund two. Fund three or fund four may get down to about 6% total cost of capital. But generally speaking, it's in that 6 to 8% range, 6.5 to 8.5% range. So you have to keep that in mind. Generally speaking, a lot of people may think that the main cause of fund death is indeed the fee wall. It's not. It's the working capital gap. And so when we think as emerging fund managers, what is that boogeyman that we always have to be aware of and be pushing away? It's the working capital gap. One of the biggest ways that emerging fund managers can keep this boogeyman away, it's salary, it's payroll, and actually making certain that everyone on the team actually does get a salary. And let me explain why. It's because if you make sure that everyone on the team does get a salary, it means you're going to have a very prudent P&L at all times, and you will make sure that your capital formation is very, very prudent at all times, okay? And this will prepare you for institutional readiness. Also, you can remember that the institutional line in the sand right now, what an institutional fund, say like an institutional LP, such as an endowment, would say, oh, this is an institutional fund. These are high conviction, high commitment GPs. That line currently is right around $50 million. And when you scroll down to the bottom of this piece, you'll see how you very quickly, within under 2 or 3 weeks, say between now and New Year's, can get a reference LP program going, okay? And this is taken directly from Capital OS Premium. We're actually going to be going over it today. So I want you to be able to steal some pages from the playbook. Let us know how it's working on your team. Feel free to either send us back a video or reply directly to this email. We'll see you at office hours on Monday.